Hello everyone, welcome back to my another video on my YouTube channel. Today is the 14th February 2026 and living here in Dubai, I see a lot of people chasing the fast life. In trading, everyone wants to be a winner. They want the 90% win rate, the fast cars and the constant action. But I've been trading full-time for the past 11 years so far, and I've been through the fires of the market long enough to know that winning is a trap for the ego. Today, I want to teach you the Japanese philosophy of being a non-losing trader. I have spent years studying the original scrolls of Ichimoku Sanjin, and his philosophy was not just about lines on the chart, but it was more about surrender. Surrendering to the market's will, not yours. Today, I'm going to pull back the curtain on my January 2026 performance, and we're going to look at the cold, hard numbers, the winners and the losers, and the human moments where I drifted from my system. We'll talk about why a win rate around 50% can actually make you profitable in the long run, and why less is more is the only law that matters in this desert of the market. Let's start with the internal truths first. This is my Excel spreadsheet where I track only my KTS, K's trading strategy trades, which is a multiple time frame trend follow strategy with a solid risk management, including stop loss, exit, and take profit, and trader psychology all in one. And here are the numbers. Please look at these stats for January. My win rate was 53.85%. In the Western world, gurus will tell you that it's just average. But please look at my profit factor. That was 5.17. That means my average profit was about 91 pips or 92 pips, while my average loss was only 21 pips. So this is where the balance happens. We call it kinko in Japanese, like Ichimoku Kinko Hyo. And this is the very important in terms of risk and the reward ratio in my strategy. And in the month of January, I only took 6 trades. If I just scroll down the spreadsheet, you can see all my trades. And these are the only trades I took by KTS. Please think about it. Most traders take 6 trades before lunch on Monday, right? But please look at the return. It's 12.4% in one single month. And here's a lesson for you. When you trade as if you have no positions, you don't feel the need to be in the market. You're simply waiting for the Ichimoku Kumo, Kijun Sen, and other lines to show you the path. For example, if you look at my Euro AUD trade, which I took the first trade in the 6th of January here, I entered with a 28 lot size, but I never knew if the trade will be profitable or not, or I never expect either win or loss. Every time I enter the market, I don't try to predict, I don't try to guess, I just be here and simply take trades based on the rules. So I never expect anything as a result. I simply follow the strategy with the logics and enter my trades based on the rules. And that's the discipline part. So I wasn't guessing, but I was simply waiting for the market to give me permission. In Japan, we have a saying about the hunter who waits for the deer. If the hunter is restless and moves, the deer runs. And the same is true in trading. If the trader is restless and enters too early, the capital runs also. So January was about being the still hunter, and patience was the very key. Now let's go to the external truths, my MetaTrader 5 account, and export the trade history. So first, let me open the trade history. And here's the history. Oh yeah, this is actually one of my best trades on gold in 2025. In July, I took the trade and I was able to take massive profit like this. And I remember in December 2025, I was also able to make another nice profit in gold. But this wasn't done by KTS, my original strategy. This was actually done by the Ichimoku original strategy. I mean, it's Ichimoku strategy anyways, but I was really happy with the result. Let me right click on this one and I click on the last month and click on the report, export by the spreadsheet and save on the desktop. I just hid my account number for security reason, but here is the history. This trade history includes some other trades besides my KTS trend follow strategy, but I didn't take many. And down here is the result with the graph. So as you can see, whenever you make profits, you should cover the previous small losses. Especially here, after this big win, I was having break-even and small losses, but the future profit should cover the previous losses. So as a result, you draw N wave, and bullish N wave on the graph. And if you're able to draw a bullish N wave on the graph like this, then you are secure. The more you take trades, the more you win profits. But if the graph, for example, looks like reverse N wave, like this down, then the more you take trades, the more you lose. And eventually, you may blow account. Or if the graph looks choppy, like this, then that means you're gambling. So check your history and check the graph and how it looks like. And this will also give you some good hint in terms of how to improve your trades over time. And many numbers here, and I used to check lots of different numbers, but now I only look at and focus only one number. As you may know, I only see the profit factor. And I do also look at win rate, but not as much as profit factor. Profit factor is basically every $1 you lose, you gain $5.16 in return. So this means the risk and the reward ratio. And to simplify it, I made the spreadsheet, Excel spreadsheet on my own so that I can track my own record. I have to put the numbers and information manually so that I remember my trades and I also count how many break-even trades I have on the spreadsheet. Now, let me go back to my own spreadsheet because I want to talk to those of you who feel like you are not trading enough. Please look at my, for example, pound JPY trades in the month of January 12th. I took 3 positions and 3 stop losses. But here is a question to you. Did I trade on the 13th? No. Did I trade on the 14th? No. I waited until the 15th for Euro USD. And even after this, did I take entries on the next days? No, I didn't take entries at all until 22nd of January. Now, most of the traders, they teach you hustle, but I teach efficiency here. If you can make your monthly goal in 3 high probability trades or profitability trades, why would you take 30 low probability trades? Because that means every time you enter the market, you're giving the market a chance to take your money out. So here is a non-losing secret. To become a non-losing trader, you must fall in love with no trade days. In January, I had more no trade days than trade days. That is why my drawdown was only down 3%, because I didn't give the market enough opportunities to beat me. Now, let me explain how I took one of the trades on January. Today, I want to pick USDCAD, which I took on the 29th of January, because this was the losing trade. And many people are showing profitable trades, how to take profit and how to get rich, etc. But here, I want to show you how I exit with the small drawdowns, because that is the very key to success in trading in terms of the risk management. How I keep my drawdown 1%, in this case 1.02% with 2 positions. And let me show you how. So let me open up the Discord group, and this is a post I post in KTS Master Community, and this is the screenshot when I entered the market. So USDC AD was downtrending. I do look at multiple time frames, so I check the 4-hour down, and 1 hour was also down. The prices were below the Tenkan-sen. In 4 hour, the price was rejected by the Tenkan-sen. On the daily, in 1 hour, the price was also rejected by the Kijun-sen. And I captured the entry timing by 5-minute time frame. In the 5-minute time frame, I use the Bollinger Bands and stochastic. So in this case, I took the entry based on the Fibonacci and the candlesticks and the Bollinger Bands. You can see that the dead cross is not happening, but stochastic is only one of my entry confirmations, entry reasons. If I don't see any dead crosses, simply I don't take it. So this is when I entered the market. And here is the screenshot of the MetaTrader 5 after I entered the market. I went down slightly towards my direction. So originally, and this is when I lowered my stop loss, and that's why I took the screenshot and shared it with the community. But my original stop loss was up 51 pips on 1.35533 level. There's a little minor high over here, and that's where I put the stop loss on. And so that was originally here, was my stop loss. But I lowered it to here because the market is going towards my direction. There's a specific timing for me to move the stop losses like this way. And I do this manually. This is not by automatic. This is done by manually on the phone as I monitor the market, because again, I risk 2% to the stop loss. So that means if the market goes against me and hit my stop loss, that means I lose 2%. I hope that makes sense to you. So stop loss is 2% drawdown. But by manually lowering the stop loss to here, this is almost like halfway to the stop loss, right? So if the market hits here and exit, then that means my drawdown will be 1%, around 1%. So this is the part of the risk management I developed on my own. Before, I used to put the stop loss, put the TP, and just let it go. Sometimes the market retraces closer to the stop loss, but eventually it goes towards my direction and hit TP. It happens. But if the market hits my stop loss every time, then my drawdown became very big. So I was wondering how to develop such a strategy to be able to lose smaller but win bigger. And I found trend follow strategy would be very nice. I can use Ichimoku to capture the right market, the right trends, and the right moments to enter the markets by 5-minute, by candlesticks and some other tools, and plus the risk management part, stop loss management. By manually moving the stop losses towards my direction, then my drawdown will be very minimal. But when I say this, then you may ask yourself, so what if I move the stop loss to break even already because there was a breakout over here? So why K didn't move the stop loss to break even? And the reason is because the running profit is too small. If you move the stop losses too quick to break even, that means you have too many break-even trades. If you have followed me for quite some time and if you tried my strategy, then I get some comments, emails sometimes that I get too much break-even trades. So how can I fix it? Most likely, stop loss break-even timing is too early. So you have to be more patient until you move stop losses to break even, or you have to create some new rules, your own rules, when exactly to move the stop losses to break even. We all have fear of losing, fear of losses, and we all want to make profits. So psychologically speaking, sometimes you may want to move the stop losses too early to break even. But again, if you keep doing that, then you may have too many break-even trades and you may miss out these profits after that. So this is when I moved my stop losses to the swing high on the 5-minute time frame. And after this, what happened was that the market went all the way up. This is 5 minutes, but the market went all the way up. There was no big news, nothing, because every time I enter the market, I make sure that there's no big news, no big fundamental, high impact news. But even sometimes these kind of moves happens. So this is the question or the comment and wisdom to you is that if I kept my stop loss here originally, then I would have been losing 2% very quickly. But because my stop losses were here, that's why my drawdown was only about 1%. So because this was halfway to the stop loss, as you can see. I hope that makes sense to you. Now, please keep in mind that this loss is actually a victory. Why? Because I followed the KTS rules. I didn't hope. I didn't revenge trade. I took the hit, closed my laptop, and then went to dinner with my friends here in Dubai. So non-losing trader is not something who never has a red trade. It's someone who never has a stupid losses. This was the smart loss and wisdom loss. And because my wins on pound JPY were so much larger than small losses, my month ended in the massive profit. Trading is 10% charts and 90% philosophy. If you can learn to be empty to trade without an ego, and to realize that 50% win rate is actually a superpower when combined together with Japanese discipline, then you will thrive. January 2026 was actually a great month for me, not because of the profit, but because I stayed true to the Ichimoku spirit. If you agree with what I mentioned today on this video, please leave a comment below balance if you're ready to stop over trading in the months of February and onwards. And if you want to move the tradings to the next level, you're more than welcome to join the 3-month private mentorship Global Trading School, which starts in April. Please check also the description below for the details. So thank you very much for watching the video, and until next time I see, please stay healthy, stay safe, and stay gold. Mata ne. Bye for now.